It is clear that majority of the people already know how to mark structure, but just knowing how to mark structure is not enough grounds to be profitable in the forex market. While you are learning how to mark structure, you also need to know how to enter those trades using the right structure which you have marked. So that is why in this video I'm going to be showing you how you can enter trades, the types of entries we use after marking structure, and how you can enter and how to take advantage of the structures after marking them. So without wasting any of your time, we go straight into the chart. The first thing we need to do is we are going to look through the diagram image, right? We draw the diagram of how the entry criteria looks like. Then we try to look at the chart and identify them. In this way, you are training your eyes how to identify this type of entry methods in the real chart, right? Because when you learn, you need to train your eyes to see it so that when it's happening in the real chart, you are also able to see and visualize them in the real chart. So the first thing we are going to do is we are going to take the entry type 1, which is the chop method, right? The change of character method. That is the most simplest and the most widely used method there is in SMC. So what do we look for in this method? So first, we need to have a break of structure. In this case, we are going to use a bearish break of structure here, right? Now, after we have our valid break of structure, let me mark this out. So here, this will be our valid break of structure as per true SMC, right? This is how we mark valid break of structures in SMC. It needs to take out an inducement, then give us a break of structure. So this is how we map our break of structures in true SMC. Now, after having this valid break of structure here, how do we look for entries? The first thing is we need price to take out our inducement. Here, this is our inducement here, right? After a valid break of structure, we need another inducement. So we need price to take out that inducement and slowly return to our point of interest. When I mean slowly, this is what I mean, right? The price doesn't just return violently. It slowly returns to our point of interest. Now, in this case, if we are supposed to mark a point of interest here, we first look for a point of interest above our inducement, right? Now, the second thing is, if there are 2 points of interest, we have the decisional and the extreme. But in this case, we are just going to use the extreme for this example. So now this is where our extreme is, right? As per our assumption, that is where our extreme is. So what do we need to do here after price has tapped into your point of interest? So the entry now occurs after price taps into your point of interest and gives you a change of characters here, right? This is a change of characters at this point, and from here on, what we just normally need to do is wait for a small inducement, and when the market takes out this inducement, then we can still look for a small pullback here and we sell, right? I will adjust that, sorry for that. So we look for a small pullback above this small time frame inducement. So basically, this in black here, this is what happens on your bigger time frame. If let's say you're using like the 1 hour time frame, right? This is what happens on your 1 hour time frame. This move now on the 1 hour time frame might be smooth, but when you move to a smaller time frame like the 5 minutes time frame, which is the proper entry time frame for the 1 hour time frame, then you are going to start seeing these lower lows, lower highs. So on the 5 minutes time frame, you identify this, right? If you are using the 1 hour to mark out, if you are using the 1 hour to map out your structure, then you should look out for the 5 minutes to identify all of these and look to enter your trade. So all of these in red should be on the 5 minutes time frame. So that is how we take our first entry. So if you enter from here, there are 2 ways which you can set your stop loss. If you enter from this zone, the first place where you can set your stop loss can be this zone, right? Immediately above this zone, above this small time frame order block here, and you set your target here, right? So your target should correspond with this low, because obviously this is where we're looking for the next bigger time frame break of structure to be, which is on the 1 hour time frame. Then secondly, you can also set your stop loss above the initial order block. So when you set your stop loss above the initial order block, it's a little bit safer, right? It's a little bit safer because maybe price might come back and decide to sweep this zone here. So that is how we look at the market. Let me adjust this. Let me adjust this so that you can see the difference, right? Now, what is the disadvantage of setting your stop loss above this zone here? So the stop loss might be bigger and your risk to reward ratio might be a lot smaller than it was when you set your stop loss here. But now the advantage is the market might not likely come back to hit your stop loss or to sweep you out using a liquidity grab. And if you set your stop loss here, you're likely to get stopped out if the market happens to come for a liquidity grab. So this is the entry method one that we use, which is the simple change of character. So you remember, what are the key points here? You need to have a break. You need to have a change of characters, right? After market taps into your bigger time frame inducement, you need to have a change of character. So the first low is your change of characters, and you need an inducement to be taken out before you can sell, which is what just happened here. So that is how we go about this entry. So some people, right, what some people do normally do is they can still wait for the market to change character, to provide them with an inducement here. Then when it comes back here, right, when it starts correcting, they still drop to a much smaller time frame here. And when it gives a change of characters here, they can sell, even reduce. So this technique reduces even these risks here, right? It reduces your risks here, because at the end of the day, you are going to end up with something like this. So this is called a double confirmation technique, and yeah, this will let you to miss a lot of trades, but this will leave you with a lot of precision, a lot of great risk to reward ratio, but this will lead you to lose a lot of trades in this case. So this is called the double confirmation technique. So I advise you, if I'm to advise you, right, I say you use just this first change of character method here, and you put your stop loss above here. There's no need for you to get too tight with your stop loss or too greedy, right? Give the market some room so that the market can breathe. So this is our first entry technique. So the first thing we are going to do is we are going to be looking at this in the charts and trying to identify this, right? So obviously this is a chart on GU here, and the first thing we would like to do on GU is mark out structure, right? So if I start here, identify my inducement at this point. If I happen to identify my inducement at this point and mark it X and identify a break of structure, so here, from here, this is where our break of structure is. So if I map out my break of structure, so you can see that when price broke below this structure, price did not really sustain. So price created immediately this pullback here. So you can transfer your break of structure to this point in time, but you should know that your main higher high in this case still remains this higher high here, right? So this is your still a higher high in this case. So now, right, after our break of structure, we identify our inducement as we rightly said. If we refer back to this diagram here, right, I said after your break of structure, right, the break of structure needs to take out inducement. So if you see here, this break of structure has taken out this inducement here. Now, after a break of structure, we need an inducement. So after this break of structure here, we need this inducement, right? So this is what we call major inducement. It occurs after a break of structure. Now we can see that in this case we have just one POI, which is our extreme POI. So it's this POI here. So what we normally need to do is we wait for price to get into our POI, then we can switch to a smaller time frame, right? So for me, at times I do keep alerts on these zones. When price gets there, it can then alert me to look into the market and try to observe the zone to see if I will have a change of characters or will have a continuation to the upside. So now price is here to get to our zone. So I would like to switch to a smaller time frame, or I can play price along until it gets to my zone, right? So let's play price along and wait till it gets to that zone before we can switch to a smaller time frame to look for an entry. So here you see that price came a little bit closer to our zone but did not really mitigate the zone, right? So if I use this candle here, you see that price did not really mitigate our zone. So we continue waiting and we play price along. Okay, so here in this point, you can see that price got to our zone at this point, right? So I will be switching over to the to a smaller time frame. When I switch over to a smaller time frame, what I see here is we have our high here, right? We do have this. If we are supposed to map out our change of characters, we map this out. Like I said, the first low in this zone is our change of character. So this is our change of characters at this zone, and our entry as it after our change of characters, we need an inducement, right, to enter. So currently from where price is, if you look carefully, we see that this is where our inducement is. So when you are in a smaller time frame, you need to be very cautious because there is what we call order flow, and the market might not totally get to your order block. So it's better for you to use some sort of order flow. So after this, right, I can still decide to use the whole of this as my order flow, or I just use this internal order flow here. But if you wish to refine, you can refine to this zone, but at times you might miss and price doesn't get right to that zone. So now I have my entry, and if I'm to put my TP, right, the first thing I look out for is this is my entry here, right? This is my entry. You see here now that I put my stop loss above the main high. Now there are two ways which I can send my TPs, right? If you look here, you're going to see some important key zones like this zone at this point here. So this is one of the zones, and the second zone we can look out for is this zone, because price might potentially also reverse from this zone. So there's one thing we are looking for, right? We are looking for the best zone to exit. So now I have these two zones, and I also have this low. So anytime price gets to this zone, I might take out partials, and I want to secure my trade when price gets to this first zone, breaks below, because in the market you are never truly certain, right? So let's play price along and see what price eventually did here. Okay, so I would like to switch to a much bigger time frame to look at the market well. Let me look at the 30 minutes time frame. Okay, so what I'm looking for is I'm actually looking for at where this other block started here, right? So this is where the other block started. So there are times where you need to cross reference so that you will not miss trades in the market. So let's go back to the entry time frame, which was the 5 minutes. Okay, this is the 15 minutes time frame as well, so we can also look at this in the 15 minutes time frame. So looking at this in the 15 minutes time frame, those that trade the 4 hours time frame structure, they are going to see that, okay, this is where our change of characters in the 15 minutes time frame was, and that's so because the market swept out, the market went above this high, right? So after that, we need an inducement which currently resides on this low, on this high here, right? Once price takes out and taps into this zone, we can look to sell. So in this case now, this is a much bigger time frame, so we can reduce our entry, our stop loss to this zone, because this is a much bigger time frame, and there's no 15 minutes is a significant time frame, and there are lesser chances of the market actually sweeping a 15 minutes entry zone. So if we play price along, you can see that eventually price came and tapped us in here and dropped off, right? You can see how price is dropping. So this is how we take our entries. So this market move happened on This market move happened on Friday, and today is a Saturday while I'm recording this video. So the market is yet to complete, but however, the market has hit our TP1. It's within our TP. It's within our TP2, right? So we are waiting for to see how this market plays out in the upcoming week. So that is what I have for you for this first entry. So we are going to go over to the next entry method, which is the sweep entry method, right? Okay, let's go into the sweep entry model. So the first thing we need to determine with this sweep entry model is our valid break of structure, right? Or a zone that the market has swept. Now with this entry model, the zone doesn't need to be a valid zone. It can be an inducement. What I mean by a valid zone is it doesn't need to be a proper POI. Sometimes you can trade off an SMT or an inducement. It doesn't matter, right? All that matters here is the market should sweep a zone that was created by a valid pullback. So now we need to obviously determine our market bias. So let's say the market is pushing up like this and we happen to sweep a zone here, or even if you don't sweep a zone here, right, we have a break of structure of this sort like this. So now we have determined that this market is actually going up. That is one of the most important things we need to do. So if we happen to map out our break of structure, this will be where the break of structure will be, obviously because the market has taken out our inducement in this case here. In this case here. So now after this break of structure, what we normally need to do is we watch out for this zone, right? This is a zone here that the market can likely sweep and continue up. So this is another zone here that the market might want to sweep and continue up. So what do we do in this case is we normally look for when the market comes back correctively. It correctively comes back. So when the market correctively comes back like this, right? This correction is very important because when the market correctively comes back, you can then determine where a change of character is. So if it sweeps this zone, if it happens to sweep this zone, when I say sweep, I mean the market pushes below this zone and doesn't close below, right? When it sweeps this zone and happens to take out the first high, this is where our change of characters is. This is a confirmation that the market actually is looking to continue to the upside. Why? The market has swept this low here. The market swept this low. It did not close. It just swept the low, right? And first of all, after sweeping the low, it went ahead to give us a change of character. So what has the market actually done here is, what the market actually did here is the market said, okay, I've taken out this liquidity under this low. I'm no longer interested in the upside. I'm already showing signs that, okay, I'm taking out this low, this pullback here, right? I've taken out the high of this pullback. So I'm expressing my desires to continue to the upside. So when this happens, right, there are two ways which you can enter the trade. First of all, you can enter directly on when this breakout happens here. So if you enter here, you're going to put your stop loss just right below this lows. Obviously, this is the most. This will be a little. This will reduce your risk to reward, and you can set your stop loss, or you can set your take profit according to your Fibonacci level, right? And what we normally expect is for the market from here to just continue pushing up like this. So this is the first way which you can enter the using the sweep entry model, right? And let's go over to the second way which you can actually enter. The second method which you can use to enter here is you can wait for this change of characters to occur, and then once this change of character has occurred here, you can wait for the market to return back to the candle that did the sweep here, right? I mean the other block at this low here. So once the market return back to that zone, then you can buy off and use your Fibonacci or target a key zone. So let me label this. That's a change of characters. So this is our change of characters here, and as I was saying, you can enter off at this other block here, right? The candle that they sweep. So if you are entering off here, this is how you are positioned. If we happen to map out that candle, so if we happen to map out this our other block here, if you happen to map out this our other block here, so this is how the other block should look like, and this is how our entry should look like. So obviously the advantage of using this is you have a very tight stop loss, right? But you are going to have you are going to likely miss trades if you keep using this, right? Out of maybe a 10 trades, you are going to get like 6, which if you were using the other method, you are going to get a more higher entry criteria. So you can use this and target a key zone, like I said, or you can set your target here, right? Depending on the distance and the risk to reward that you are being offered. So now we have seen the model for this. Let's go directly into the charts to explore and look at a critical example of this, right? Now, obviously, majority of the people obviously ask if do these methods work on Go. So we are going to use Go as an example to map out these methods here. So like I said, right, the first thing we need to do is to determine our market bias. So determining our market bias, we start by mapping out our break of structure. So obviously, I map this zone because it has taken out an inducement, right? The market took out an inducement here, which led to this break of structure here. After leading to this break of structure, after this market took out this inducement, right, we had a point of interest here. So you can see that the market rightfully tapped into this point of interest and led to our break of structure. So this was actually a very good buying opportunity here, but obviously we did not get into this. Now, after this, right, after this, we have determined that the market is going up. So we have multiple lows here. Right? This is a first low, which is our inducement. This low here, right? I'll map this out here. Even though if the market sweeps this one, I might consider, but this is due to the fact that this one is an internal low, right? So I map out my low here. So I'm looking for the market to either sweep in any of these lows and give me a change of character so that I can look for an opportunity to enter the market to the upside. So if I happen to play price along, okay, so basically what you see here is the market has swept this low at this level here, right? The market swept this low. So this is our sweep of our inducement, and after sweeping this low, the market went ahead to go and take out our first high. So this is basically the change of characters at this level. This is our change of characters at this level. And like I said, there are two ways which you can enter, right? First, you can just enter directly at this break. Once this candle closes above the next candle, you can enter, you put your stop loss here, you extend your TP to your desired zone. So this will normally leave you with a very risk to reward, with a very low risk to reward. Or you can enter at the other block that caused this, that swept this low, right? So for me, I definitely choose the other block that caused this sweep here, which was this other block at this level, right? So now all I need to do is wait for the market to return back to this zone. So the market has swept the low, it has given me the change of character. I'm just waiting for the market to return to this zone here. So now I can set my limit, right? Because it has already made my conditions, and this zone is my entry. Whether I enter manually or I enter I enter with a limit order, it doesn't really matter. But entering manually will always leave you to enter a little bit late. But if you happen to put a limit order and the market activate that limit order, you enter a little bit early. So now if I set my limit order here, if I set my limit order right here, and I can extend my TP now, so you can see that this is significantly higher than the trade we had. So if I'm expecting my limit, I should if I'm expanding my entry, I should expand it maybe to a key zone to my right. So my key zone normally is here. So this will be around a 1:5. So if I play price along, you are going to see that we immediately got tapped in and the market immediately went to our TP. So now these trades I normally send here are not just, or I normally use in my videos, are not just normal trades. These are trades that I actually took, and I'm just like showing you the right way to actually enter of using these trades. So after this, I'm going to be going to my Telegram group. I will be showing you this trade, and I'll also be showing you the GU trade which we took, right? So these are the two examples. I think there should be another entry method which I will not like reveal in this video. That should be for the next video. So let's go over to the Telegram group, and I will show you these trades I took. These are not just mere examples. Okay, so heading over, this is my free Telegram group here, right? So if you want to join, I'll be leaving the link to this in the description. So first thing first, we need to go over to the trades. I do send a lot of trades here, and I also do send a lot of this on my TikTok, right? So I'll be leaving the TikTok, the link to my TikTok in the description of this video as well. So scrolling up, you can already see examples of the trade. So now this is a trade. This is a trade here, and if I happen to scroll ahead here, you can see that this was where I initially sent the first entry, right? When the market just tapped, this is the GU trade, the first one they used to review. So when the market just tapped into this zone, we already had the first trade there. Then we had another re-entry, which was the one we used to teach you guys, to show you how the re-entry actually works. So this was the zone that we got our re-entry from, and if I scroll a little bit down again, you are going to see the re-entry, right? This was our re-entry here, and this was the setup I dropped. Now if you happen to push a little bit back, we are going to eventually run into the goal trade which I gave, right? Okay, so this was the gold trade, and this was the result of the trade. Now if you look at it here, this was the entry. This was the entry I sent here. When I sent here, many people were confused and commenting because I've not really talked about this entry model in my lessons before, but you guys are very opportune to have me talk about these entry models, right? So this was my entry. I sent it here. Price then eventually retraced back to a zone here, and before it went ahead to hit our TP. So guys, if you are still watching to this point, it means you found value in my content. Please try to hit that subscribe button, like and support me so that I can get more followers. That is an encouragement for me to continue making more educational videos like this for you people, and for you to also continue learning from my experiences, my trades, and the way I manage my trades. So I think that will be all for this video. Thanks for watching. God bless you all. See you in the next video. Peace and out.